All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with this early year run in stocks, with the markets chasing down some major milestones. We'll show you the scorecard here with 60 to go in regulation. Dow, as you see, is red today. S&P is too. Dow edging ever closer, though, to 50,000. We're tracking that. NASDAQ is green today, thanks to nice moves in NVIDIA and Microsoft, Amazon and Alphabet. Housing-related names falling. We'll tell you what hammered those names today. Cyber stocks are bouncing. One firm growing more bullish on that group. We'll have more details ahead. All of it takes us to our talk of the tape, this record rally. How far can it really run? Well, let's ask Tom Lee. He is Fundstrat's head of research. He's also a CNBC contributor, and it is great to have you on in this early part of the year. Welcome.
Great to see you, Scott.
Market's off to a pretty good start, which was not necessarily unexpected by you.
I didn't have any expectations, but it's always a good sign to be strong out of the gate, as you know, because what markets do in the first week or so give us a hint for how markets are shaping up for the year. Our base case was a rally, maybe to start the year, and then a big correction, and then a rally at the end.
Big correction, if not a bear market.
I think
those are your words, not mine.
Yeah, I think there'll be a point this year where it's going to feel like a bear market.
Yeah. What about the way that the market looks as the year has begun? What do you make of it?
I think it's encouraging because we have some breadth, right? Energy materials are doing well. The Mag 7's catching a bit, and crypto's doing well. But healthcare's strong, financials, industrials are strong, and small caps. I mean, it's sort of a broad market.
I mean, almost want to say an everything rally. It's not like tech is doing terrible. It's just being overshadowed by some of these other moves. The equal weight S&P ETF is coming off a fresh record high of its own. That says everything about what's driven this market.
That's right. I think for investors and for institutional investors, breadth being good is always a good sign, actually.
Is it sustainable? Is this the way it's going to look for a little while?
Well, I do think there's a couple of sort of macro tailwinds that should help stocks. One is, I do think that the economic clarity is better because the tariff disruption is more in the rearview mirror, even though we could get that overturned. But in general, tariffs aren't going up. They could be flatter down. And the second is the Fed is really turning into a tailwind because the Fed is leaning dovish. They're focused on the job market. QT is over. We have a new Fed coming. And so all of these are, in some ways, I think, and they're not fighting inflation anymore, a put for the equity market.
What happens if SCOTUS strikes down the tariffs? Is that a positive or negative for the market?
It's a source of confusion. It's going to depend on how they word their decision because, you know, there may be refunds involved and claims. And of course, we know the White House will seek to re-implement the tariffs. But I think on balance, it means that we put a ceiling on the tariffs, that they aren't going to be higher, but there's a chance they're lower. That's a net positive.
I mean, there could be, you know, I was going to use, you use the word confusion. I was going to use a little chaotic. I mean, it could be in the immediate aftermath of that and trying to figure out if, you know, you have to start giving refunds to people, and then you wonder what the bond market may do. So there are a lot of things to consider as we could get this as early as potentially the end of the week.
That's right. Now, you know, some investment firms have already been buying refund claims. They're offering to buy these claims from companies at 30 cents on the dollar. So in some ways, the economy is pricing in some of these refunds.
So one of the questions leaving 2025 was the valuation of the market. What price should you be willing to pay for what the expected earnings are? 22 times is where we were, which some had claimed to be rich. Barclays had a note out today which said they look reasonable. They say 22 times is not cheap by any stretch. In our view, current levels have not historically impeded returns, provided EPS growth remains positive. We do think that estimates are overly optimistic, yet we still expect the S&P 500 to print double-digit earnings growth this year. Do you have any doubt on the strength that earnings will come in at?
You know, as you know, S&P earnings is a mix of all the 500 companies. But I think in 2026, earnings quality is going to be stronger because revenue growth is increasing and the rate of earnings growth is higher. So you have both top line improvement and margin expansion. That should support multiples to actually be higher.
What do you make of the way that banks have gotten out of the gate? They have just, you look at Goldman Sachs, for example, it's astounding. We're 3.5 trading days in. This thing's put in like 9% already. What do you make of that?
Well, as you know, one of our themes is that we think financials are going to be re-rated more like tech stocks over the next few years because they've proven that they earn money through the cycle. They're big winners of AI, especially the ones that are tech forward. And they have expanding margins and they benefit from lower rates. I mean, in some ways, I think they're pretty undervalued right now. What
about tech? Since you bring it up and so much focus is on it, how do you feel about that right now?
I think the earnings growth is the reason you stick with tech because these are companies with really good market position, good earnings quality, but we just don't necessarily say the multiples should go up. So I think it's sort of like earnings growth with flat multiples means they still can do pretty well.
Pretty well, but would you overweight the group? I mean, if you still think that the earnings growth is going to be outsized relative to everything else, which it's likely to be, right? It almost has to be given what's happening because of AI. Doesn't that speak to the continued outperformance?
100% agree, because let's say the S&P's earning growth is 16. Well, if something's growing 25 or 40%, you'd need a lot of PE compression to underperform the S&P. So I still like tech, but I do think groups like energy and basic materials, which have been really terrible for the last 5 years, can actually outperform tech.
What would you stay away from?
Well, I think that this is a year not to be defensive. And then, of course, as you know, Washington picks winners and losers. Last year, it was bad for consulting firms and bad for healthcare. It sounds like it could be bad for the institutional housing buyers. So I think you've got to be careful what Washington deems as winners and losers.
Okay, well, it's a great segue to what we're going to talk about next. Tom, it's great to see you here. Thanks for being here.
Yeah.
It's Tom Lee. We are following major market development. Carl, thanks. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Big number hunting with stocks heading towards some major milestones today. We'll trade the markets, of course, with the investment committee. And joining me for the hour today, Joe Terranova, Stephanie Link, Liz Thomas, and Jason Snipe. We'll show you the markets here. Yes, the Dow is red, and the S&P, though, and the NASDAQ are green. All right, so we did open at record highs. Joe, we're chasing 50K on the Dow. We're chasing 7K on the S&P, and the futures are outrunning the markets today.
Well, the March futures are now trading 7,000. They've done so here in the last 20 minutes, and that's the expectation that the market continues to move higher. But I think the price action over the last 4 days is indicative of that. The market seems to be going to different areas, very tactically trying to find opportunity. Today, it is about software. Finally, the long-awaited mean reversion. It appears in 2026. You have names like Datadog, Synopsys, Cadence that are moving higher. IGV is higher on the day. I would also focus on Microsoft of the Mag 7. That's the software name that I think if we get a continuation of this mean reversion that you want to look at. But I think the message over the first 4 days is the market's not running away from risk. It's looking to actually accept risk, create some alpha opportunities rather where it can, very tactically. We've talked about a variety of different places, financial sector, technology, healthcare, biotech, and I think you have to like that.
This is a Stephanie Link market. That's the way I'm looking at it.
It's been a good couple of days, yes.
It reflects your portfolio.
Yes, it does.
A little bit of tech and a lot of everything else. And that's very much where we are because the S&P, as it does head towards 7K, it is doing it without some of the very biggest names taking it there. The equal weight is coming off a fresh record high of its own. And we know the areas in the market that have been off to the races to start the year. Banks, industrials, and all the stuff that you've been talking about because of the economy. And as one business executive said to me today, he's surprised with all of the business activities going on post-holidays, quote, like the floodgates instantly opened. That's kind of reflected in the market.
we talk about loan growth as being very, very important from the banks. And I cite this really wonky statistic from the H8 data from the Federal Reserve. It's just loan growth data. It's activity from the banks. We've had 11 consecutive weeks of loan growth. We're at record highs. And why do we care? Because if they're lending, then the activity in the economy is actually building. And that's exactly what we are seeing. We're at record highs in bank loan growth. 11 straight weeks, by the way, Scott, is at the best consecutive weeks since the second quarter of 2022. So banks are lending. That's good. The consumer has been spending. They're consuming. We're looking at retail sales. I look at credit card data. $1 trillion in holiday spending this past season. You have the AI momentum. You not only have the growth from AI, you have the food chain that's benefiting, and you have productivity that's happening. All of this leads to double-digit earnings growth. Is it going to lead to 16, 17%, like some strategists are thinking? I don't know. I'm going to point to you on that. I don't know, but I think 10 to 12% is very reasonable in a 2.5%, 3% GDP world, given all the things that I'm talking about.
You get the feeling from both what you say and what I heard from the person that I was quoting there. It's like animal spirits were delayed, not denied. Coming into 25, everybody was like, I remember, late in 24, it was my conversation with Todd Bowley of Eldridge out in Beverly Hills was talking about animal spirits, and you had the Trump election and taking office, but then you had the tariffs, and it upset a lot of that. But now it feels like you may actually get what some thought was going to happen a year ago, and the market kind of reflects that if you look at the equal weight that's really doing great. What do you think, Liz?
Yeah, I mean, if we look at just cyclicality in general, we're almost hitting on all cylinders. All of the indicators that the market would give you for cyclicality, things like consumer discretionary outperforming staples. We had the value index hit a new high before the growth index. Some of the recovery that we had after that pullback in November. All of the cyclicality stuff is here, even in commodities, right? Copper is doing well. Gold, obviously, still doing well. But all of the stuff that would tell you economic activity not only is picking up, but is expected to stay strong. To Steph's point about consumer spending, I think that's a really important thing for investors to realize, is that despite the fact that we didn't have the year-end rally or the Santa Claus rally that we all hoped for, the consumer kept spending. Retail stocks should benefit from that. The economy should benefit from that. And I think sentiment will start to recover after the soft patch that we saw in the fourth quarter of 2025. So I am still cyclically bullish. I like materials for the year very much. I like healthcare as a place for investors to rotate into looking for growth exposure, and that continues to do well. And I just like how the market's shaping up, especially after a geopolitical shock coming into the year to kick it off with a bang.
Especially, Jason, when you had so much conversation last year about valuation of the market.
Yep.
Well, it's rich at 22 times.
Yep.
You're not going to get multiple expansion this year, so you have to have a really strong level of earnings growth to carry the market higher if it's going to go higher. I love a note from Barclays today, which takes on the valuation question and comes back with the fact that they say they look reasonable to start off this new year. Quote, while 22 times is not cheap by any stretch, in our view, current levels have not historically impeded returns, provided EPS growth remains positive. While we do think that current street estimates are overly optimistic, we still expect the S&P 500 to print double-digit EPS growth this year. It better.
Yeah.
It has to.
No, it has to.
It has to.
It has
to
to.
justify that valuation, which may, in fact, grow a little richer.
And there's no doubt about it, Scott, that the earnings picture looks very positive, whether it's 12, 13, 14, 15%, somewhere in that neighborhood, I think, what we hear from strategists. And I think, the multiple on the market historically is not a great timing mechanism for markets, right? That's what we do know. And what I guess my impression of the market and what's been going on the early part of this year from a positioning standpoint and just the breadth that we've all talked about is this is durable. This is a healthy market. We want to see, to Steph's point, the other 493, the other sectors starting to perform, whether it's the KRE, regionals, financials, industrials, transports hit an all-time high the other day. So these are all positive momentum factors for me, and I think it spells to the durability of this market.
Steph, take a look at the banks. Already year to date, it's Capital One's up 5%, we're trading for 3-4 days. Morgan Stanley's up 4.5, Goldman's up 7. You don't own it, but the other names, Bank of America, Wells Fargo, maybe a little less than that, but nonetheless, the group is off to the races already. Will bank stocks, B of A asks, once again outperform the S&P? They say yes. They overweight the banks in a run-it-hot economy, exactly what we've been talking about. They raise price targets across the board. Goldman to $1,000 and $1,050, Morgan Stanley to $210, JPM to $362, Wells to $107, I think is your largest position overall. If not there, it's number 2. And that deregulation, which everybody's been talking about, again, it goes kind of towards the animal spirits umbrella, is the name of the game in 2026, finally. A lot of things that just didn't happen in 25 are now you're going to tick off one by one, and they're going to be good for various sectors of the market.
Some of these stocks are up 20 to 40 to 50% over the past year, so a lot of good news is priced in. However, there's many ways to win with the banks, and it is capital markets and investment banking fee growth in the double digits. It is M&A, which grew globally 27% last year. In the U.S., M&A was up 55% last year, and we didn't even have deregulation last year, so just wait on that front. Loan growth, as I just mentioned, the H8 data, they're lending out. That's good. Net interest income is going to slowly recover, Scott. I do not expect a massive reprice in net interest income, but it's going to happen, especially if you look at the yield curve. And then again, as I mentioned, in terms of deregulation, it's M&A, but it's also excess capital. And what are these companies going to do with the excess capital that they have? There's $192 billion of buyback announcements from the Big Six that is still yet to be deployed. And we haven't even seen Basel III Endgame, the excess capital requirements, ease. And so I own Bank of America. I do not agree with the downgrade. There was a downgrade this morning because of expenses. He's laser focused on expenses, and it better be flat sequentially, and I think it will be. But I think you're going to see ROTCEs in the upper teens at Bank of America. I think you're going to see it at 18%. This is profitability at Wells Fargo. I think Morgan Stanley has low 20s as a target, easily to be done, and Capital One as well. I just think it's a little bit, I hate to say it's different this time, but deregulation does open a lot of windows for this group. And it's a
de-Reagan deals. I mean, capital markets activity, all that stuff.
So people, the pushback I get is, well, these stocks are expensive. They've all run. But we haven't had this kind of environment in banks since 2008. Right. So to me, I think you continue to see the re-rating.
On the valuation question, which is part of the reason why JP Morgan got downgraded, along with Bank of America, and it was Wolf that did the downgrade. Right. They say valuation's full at 14 times. I think I heard Kramer the other day was talking about these stocks are still cheap. Yeah, like JP Morgan at 13 times is cheap, not full at 14 times. Now, that's where I guess the debate is going to rage.
And my argument would be you're going to see better than expected earnings growth. You're going to see double-digit earnings growth. You're going to see better profitability. At the same time, you're going to see capital returns to shareholders. What's not to like at that? At 14, 15 times? Okay, the Morgan Stanley and Goldman are trading much higher. They're a little more expensive, rightfully so, because they're going to grow much faster and their profitability is going to explode going forward. However, I still think there's value across the spectrum, and I think you want to have exposure. I'm 10% overweight relative to my benchmark in financials.
Jason, best name in the group is it Goldman Sachs? For you,
me,
it's the one you have at the top of our stack,
right,
and the top of the performance stack already this year.
Yeah, up 9% already year to date, and up 50 plus last year. The major theme for me, and Steph just kind of touched on it a little bit, is banking fees were up 42% last quarter. 18% revenue growth. And I think with the Fed in an accommodative space, the IB names are really going to run, to Steffi's point. I think just the acceleration there, and yes, they have run a lot already, but I think there's still room to grow there for sure.
Last comment on the banks to you with JPM, which, by the way, today cut all ties with proxy advisors. It's the first in the industry to do just that. It's newsworthy. We bring it up. Stock's down a couple of percentage points. As I said, it was part of that downgrade today at Wolf. They only look for modest upside to the numbers. They think the valuation is full.
Yeah, look, focusing on a multiple is not something that I'm going to do. when making an investment decision. And 2025 taught you that lesson because the multiple on the S&P overall was basically the same coming into 25 as it was going out on 25. So it's about earnings growth. To Steph's point, it is the earnings growth that's being delivered from the money center banks. But I think there's derivatives off of that. Look at where the exchanges are. There's a tremendous opportunity to own those names, like a Schwab, an Interactive Brokers, like a NASDAQ, some of the research firms. We have Moody's in the JOT ETF. That's performing incredibly well. So I think it goes beyond just these money center banks as long as the trading environment is robust, and I think it clearly is.
All right. Now, let's make our turn to the mega caps, which we said have not been doing all that much to start the year other than Amazon, which was the biggest laggard of the group last year, was a virtual nothing, and now is up, Steph, 5.5%. NASDAQ's leading today. It is not having a bad year to date by any stretch. I said we're only a few days in. But when you see the outperformance of the equal weight versus the mega caps, the cap-weighted S&P, what do you think about it?
I think that Amazon and Meta are screaming buys for 2026, and I own them both, so in full disclosure, but I think it's a reversion to the mean trade. And that's not the only reason. The fundamentals are extremely robust. I have no idea why Amazon is only up 10% in the past year, because AWS is accelerating, and it probably could get to the mid-20% growth rates. Retail, no one has retail sales numbers like Amazon. 11 to 12% same-store sales. They're recovering internationally. Advertising is growing double digits, and that's their highest margin business. So I think you're going to see earnings revised higher at this company, especially as capacity improves in terms of data centers in AWS. So that one doesn't make any sense to me at 14 times EBITDA when historically it's traded at 18 times. Meta, on the other hand, I don't know if you don't want to go there, Scott, but I think it's
now
a buy.
You went there. We'll go there because Brad Gerstner was on yesterday.
Yeah, I heard,
and he doesn't own it anymore. And you know his long history with it without, reading the whole quote from him yesterday. In essence, he thinks they're behind. They're behind a lot of the other players that matter, and maybe it's too much ground to make up. If they turn some things around, would he be back in? Maybe. But he's not now, and that is telling for somebody who has a long and distinguished history in this name.
For sure, absolutely. I think this company has $30 to $8 of earnings power by 2027, and it's because they are spending so aggressively, and they may be behind, but they're spending aggressively to lift that gap, if you will. And in the meantime, the stock, it almost trades at a one peg. It's 22 times. It's growing earnings at 20%. Revenues are 26%. I think you're going to see an acceleration because of AI help a lot of their businesses, namely messaging, some new tools as well, some new applications as well. And in the meantime, you have impression growth growing double digits, 14%, time spent up 5%, and the cost cuts. If they actually, in fact, come through with the Reality Lab cost cuts, that's $5 billion. That is a lot in terms of what they can do with it.
CG Capital agrees with you. They see the pendulum swinging back to Meta. That's the headline of their note today, that they believe the market is underestimating or underappreciating the impact of the investment in AI that they're having. Joe, last on Meta.
Meta's down 2% over the last 30 days. I think from a fundamental perspective, I agree with what Stephanie's saying. It's a longer-term investment. I think you have to stay there. Quantitative models look at 30-day momentum. That is why it's so important. Right now, Amazon has a significant lead on all the other Mag 7s. Over the last 30 days, Amazon is up 7%. You can't find that type of performance anywhere else except maybe Alphabet or NVIDIA, which is going to give you 2% higher. Apple's down 5% over the last 30 days. Tesla, Microsoft, basically unchanged. So I think I agree with Stephanie on the fundamentals of Meta. It's a little bit of a longer-term investment. Right now, the focus on the quant models is specifically on Amazon, which I think continues to move higher.
What about NVIDIA, Jay? Which just can't get above $200.
Yeah. And what I would say is I think CES did not disappoint, from my vantage point in terms of what was stated about the Rubin chips. We're talking about 5 times compute from the last iteration of chips. The second story for me is inference cost down 10 X. I mean, these are significant developments for me. I think they just continue to innovate, and we always talk about the showman that he is, but he does deliver. He does deliver. And, you know, I mean, the news from China about the H200s, we'll see, that's been a mess.
So that was the information reporting today that China has told tech companies to halt H200 chip orders. We'll see what develops from that.
But I think that the other point for me, you're talking about a stock that is now trading at 25 times, which is experiencing 40% earnings growth. I think that's a good buy right here.
All right, Liz, so you get the comment about the group at large as HSBC questions where we are in the cycle, and they believe that we are still in the initial stages of a mega cycle of AI.
I absolutely agree with that, but I don't think the same winners that have won by double-digit percents will continue to win throughout the entire life cycle. That's not usually how it works. So I think we're at the stage now where you've got other sectors that can come in and start to benefit from this, and we're already seeing that in some places. There are productivity gains that are actually starting to materialize. They're anecdotal at this point, but they're starting to materialize, and that's what investors have been begging for all the way through 2025. Even back in 2024, all of this CapEx spending on AI needed to result in revenue, needed to result in productivity, needed to continue producing earnings. Now that's actually happening. And I think in 2026, the phase is that AI starts to bleed into other sectors. Productivity gains are seen in other sectors, particularly some of the ones I've already mentioned, healthcare, materials. I think industrials is in that camp as well. And that's where you see the broadening out and the durability of the economic growth story that can result from AI. But will all of these Mag 7 names be the darlings forever? No, and I don't think they should be. I think we have to share some of the love.
Is there a bigger show-me story in the market for 2026 than Apple? The stock, everybody knows the anthology of where their AI is, and they've had the executive reshufflings and departures and what have you. The market started to give Apple the benefit of the doubt halfway through 2025. They're going to get it right. 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 Keeps going up into the right. Now it's been down for 6 straight down days. It's the longest slide since August. You have some firms out there defending it today. But how about that notion that they got a lot to show this year?
Well, first of all, technically, it's pulling right back to the 100-day moving average. It's the first time it's doing that since August. I believe, from a market cap perspective, for the first time in many years, Alphabet is now valued higher than Apple. Looking forward for Apple, I do think they're going to deliver in 26. I think that Apple is going to be north of $300 for a variety of reasons. I think you're going to see the resiliency in terms of the actual phones. I think you're going to see a resurgence in the growth in China, which is going to be remarkably important. I think it's going to be remarkably important not just for Apple, but other names that are affected there as well. And then ultimately, I think you get some form of a partnership on artificial intelligence. Maybe it's with Gemini 3. I'm not sure who it is. But I think that partnership's coming in 2026.
Okay, now the other big part of the AI story, obviously, last year was around the industrial complex. The power producers and anything almost related to that had a tremendous run. Industrials are coming off a record close. Caterpillar is one of the best performers in the entire market last year, in part because of that story. You do have other names. I'm really interested to hear the reasoning behind a sale of yours, Stephanie Link. One of the names that you frequently mentioned throughout 2025 that you had owned and loved and now have sold, and it is Eaton. What gives?
I still like Eaton. They're doing a very good job. I am up to my eyeballs in the industrials playing on the AI, data center, grid, and power themes. We've talked about this for 2.5 years, and I've done quite well with Eaton. I've done quite well with Quanta Services, GE Vernova, Vertiv, Rockwell. I'm looking at these names and I'm thinking, what do I like the best? And the one I like the best, and the one I've been adding to, and we talked to about it in December, was Rockwell Automation, because I think it's very underappreciated. And I think robotics is in the second inning. And so I was taking money slowly out of Eaton and putting more into Rockwell. Rockwell proved themselves that they were able to expand their organic growth last quarter from 3% in the second quarter to 13% in the third. And I think it's going to continue to expand. And you have a new CFO who's focused on margins. So I think there's more operating leverage. I think there's better earnings growth. I think it's a little less discovered and a little cheaper. Eaton is wonderful. It's a great company. So if I owned it, if I only owned it on this theme, I would hold it. But I just prefer all of these other names, and some of these other names have gotten hit in the last couple of weeks, and so I want to add to them as well. So fundamentals are still fine. I just prefer the others.
I don't know. I think there was an earthquake with the talk from Jensen Huang surrounding the Rubin chips and the effect that it has on data cooling. There's 5 stocks that got punished yesterday. Trane Technologies, we own it in the ETF. Johnson Controls, Emerson, Eaton, and Vertiv.
You own Eaton.
They're down
Eaton.
again today. I own
these.
Eaton as well. So we bought Eaton in July at 380. It's now a losing trade. Nothing we could do about it till the end of January. But I think what happened yesterday, there was a dramatic effect, and I think it's going to be a continued effect. And I think it's real. If these Rubin chips don't require the degree of cooling that these industrial names have been benefiting from, the expectation that their revenue would be growing on that contribution, that's a little bit of a game changer for sure.
I think it's overdone. I think it's way overdone. When you look at the backlogs of all of the companies that we're talking about, even Eaton, right? Even Eaton, their backlog, their North America electrical backlog, up 20% last quarter. That's real dollars in hand. That's not orders.
You think the sell-off is overdone, or
I
you
think the sell-off is
okay?
I think the sell-off is overdone. I think certainly maybe these new chips require less, but they're still going to need cooling overall. And the backlogs are very supportive of continued growth. Same with Vertiv, with their backlog up 30%. Same with GE Vernova, with their backlogs up 33% across the board. So to me, if these are huge numbers, Joe, you know that, and that's better visibility. So let them sell off. That's going to be your opportunity to add to them.
They are, but when Jensen Huang speaks, he usually is pretty confident and pretty accurate in what he believes. So those Rubin chips, they do have some powerful effect on cooling.
All right, so we'll follow all of that. We've been documenting for all of you the strength in healthcare to end 2025. Which was the best performing sector for a big period of time. It's up 16.5% in 6 months. It brings me to another purchase of yours, another move of a stock that you've liked and you have consistently added to, and you are again, and it's Zoetis.
Yeah, it was a horrible stock last year. It was down 23% in the past year. Very surprising for a company that's in an industry with 3 players and they have a 20% market share. And I think the total addressable market, if you include retail and services across the board of animal health, it's a $200 billion total addressable market by 2035. This year, this CEO needs to execute. If not, I would not be surprised if she's gone, because they do have the greatest products out there. They have 5 blockbuster drugs coming out in the next 5 years, and yet the competition continues to eat at them slowly. Elanco is an example. It was up 85% last year. I own that one too. So to me, I want to own the best in class down and out, where I think the operational growth is going to be above the peer average, but it's a show me story, Scott, so it could get a little messy. We'll see.
What about Natera, which you bought more of as well, which is coming off a huge run of its own?
I know. And I added to that one as well, because I'm a big believer of women's health, and I think they own the MRD market. They're growing double-digit earnings. I think their gross margins only maybe 10 years ago was something like 40%. They're 60% today. I think they're going to get to 70% as their goal. I think there's a lot of operating leverage and a ton of growth. Talk about total addressable market in the spaces that they're in. This is one of the best diagnostic companies out there.
All right, last point we make in what I think is a pretty comprehensive look at why the markets are where they are and where our group thinks that they can go from here. And that is this report from our own Brian Sullivan today. It was an exclusive that oil sales from Venezuela will continue indefinitely. Sanctions will be reduced. It's a big scoop and a market-moving one at that, because names like Valero, and if you think about refinery-type names and the ones that had already moved the most on the backside of the initial actions related to Venezuela, it is the one that you own. It's Valero, and it is up again on this Sullivan report.
Because they have proven to be able to efficiently produce heavy oil and deliver it to where they are profitable on that. And remember, it trades at a discount, heavy oil to light oil. So Valero is well positioned, Marathon is positioned, Phillips is positioned as well, but to me, Valero is the one that you want to focus on specifically. There was also a little bit of a resolution with Governor Newsom in Northern California. Valero's presence will remain to a certain extent in Northern California, which is good as well.
All right, we bounce for a couple. We come back, calls of the day. We're back, calls of the day. We begin today with Disney, reiterated by Moffett Nathanson. They asked the question, who's the biggest winner from the ongoing Netflix, Paramount, Warner Brothers Discovery bidding war? Well, after Warner Brothers Discovery shareholders, next up to us would be Disney. Joe, what do you think?
I'm not sure about that. Look, we put a position on here at the end of October at around $112, and we did not put it on based on revenue growth, which is important to us. Revenue growth for this company has been low single digits for the last several years, so that's troubling. It barely squeezed in. If you think about holding 125 stocks and you were to rank them, almost like college football rankings, this was literally right at the bottom, and it was there because it had a surge in the second quarter, a significant momentum move, and that's why we bought it. Where it is right now, it's kind of flatlining. The end of January, we'll take a look at it, but I'm not going to speak with confidence about it because I really don't feel confident about this position.
Do you wish it pulled in Notre Dame and refused to go into your index?
That's a great analogy. I don't know if my compliance department will have a problem with it, but yeah, maybe.
All right. I think the writing's on the wall. If it was in a better conference, maybe it'd be.
Yeah,
I don't know.
Exactly.
All right. Colgate-Palmolive. I couldn't resist. Upgraded to overweight at Piper Sandler. Jason, you own the name. What do you think?
Yeah. So I mean, obviously the price action hasn't been great over the last year. It's down almost 12%, and there's been earnings and revenue softness over the past year. But I mean, for me, this is a call on emerging markets resurgence, which I think will be positive for the stock. It's a multinational name, so I think that will be a catalyst. So let's see how it plays out. A lot of the staples haven't done well, but I think this year will be better.
All right. What do you think about First Solar, Joe?
I think this is an interesting one. This stock is
downgraded
up
today.
Yeah,
Jeffries.
It's up 22% over the last 52 weeks, and that's surprising in the face of the big, beautiful bill. And the stock is now pulled back. Look, you've had margin compression. They've lowered guidance consistently through 2025, but why has it worked? Why is it up 22%? They're shifting production from Southeast Asia back to the U.S. They have a new plant that's opened up in Louisiana. They're also beginning to talk about accelerating the buyback program. So I think this is one of the reasons why you've had resiliency here. I want you to rely on the technical formation because it hasn't broken below your 100-day moving average here since the early part of 2025. It's right there at the 100-day now. So if you have a long position, utilize that as an important point of reference, but otherwise maintain a bull bias.
All right, let's go Toll Brothers and D.R. Horton as we think about the housing trade. So Toll gets initiated market outperform. Citizens, 175 is the price target. So that's a nice upside from here. D.R. Horton gets downgraded. Same firm to market perform. What do you think, Steph? These are both yours.
I mean, everybody hates D.R. Horton now. Everybody hates housing, and that makes me more interested in wanting to buy more of these.
Jason doesn't hate housing.
I know. He's with me. We're in the pain game together, unfortunately.
Yes, we are.
Look, these stocks are very, very cheap. The way I look at it is like they're running as best they can in a very challenging environment. Not much has to go right. And what I've decided to do is barbell between in housing, high end, which is Toll Brothers, best in class, best margins, and probably positioned better than a D.R. Horton, which is more first-time buyer. But I do think first-time buyer, there's pent-up demand. We've talked about it. Is it going to be all of the 4 to 5 million out there millennials that are looking for a home? Probably not. But I think you just need interest rates to come down just a little bit. And if they do, I think both these stocks will move a lot higher.
Yeah, no, I get that strategy. I think it makes a lot of sense. And I think for me, as it relates to D.R. Horton, it's been about the incentives. That's what's hurting margins, so the new purchasing incentives. The Fed is accommodative. So if rates do come down, I think this could really lift this stock. It's kind of the way I look at KRE and regional banks in the financial sector.
All right, so take one of the 3 A's for me, Joe. Okay. Amphenol, buy at B of A, Allstate top pick at JPM, Ametek target raised at Rothschild.
Very easy. Amphenol. We've owned this. Steph's going to love this. Since inception, for over 5 years, it's up 345%. Technology company, communications oriented, diversified in terms of where they're delivering their products, delivers that double-digit revenue growth on a consistent basis. It's the one name that we've held for the entirety of the ETF.
Okay. Want to get down to Washington. We have some breaking news out of the White House. Eamon Javers has that for us. What do we know here, Eamon?
Scott, we've got a new post here on social media from the President of the United States who says he is taking action to deal with inflation in home costs. The President taking to social media to say that I am immediately taking steps to ban large institutional investors from buying more single-family homes, and I will be calling on Congress to codify it People live in homes, not corporations. I will discuss this topic, including further housing and affordability proposals and more at my speech in Davos in 2 weeks. So the president here is saying that the American dream of owning a home has gotten out of reach for too many Americans, particularly young Americans, and says he is going to take steps to block large institutional investors from buying homes. Not clear here from this post on its face what specific regulatory steps he says he's going to take here, but he also says he's going to work with Congress to codify that into law. So obviously something for those large institutional investors to look at very carefully here now.
I mean, the biggest question is what power does the president have to do anything about this at all?
Right.
Eamon.
Right. I mean, I can think of several regulatory bodies that might have something to say about this. The SEC, Federal Housing Administration. There are a number of ways the president might be able to influence that, but the legality of that, which agency, which regulatory process, none of that addressed in this post, which just popped within the past couple seconds. So we'll try to get the White House to give us some more details on what the legal basis is for their decision to say to the large institutional investors that they can't participate in this market.
Right. I mean, we obviously show Blackstone is the top name that we first thought of. Eamon, thank you very much. Eamon Javers there at the White House, as you see. Blackstone, the first name that we would think of because of a good part of their business, certainly. Interesting, too, though, in that Steven Schwarzman is a very big supporter of, and has been, of President Trump.
Yeah, I'm sure there'll be a conversation before Davos when apparently we're going to get more information on this. But to see Blackstone down 7%, I almost want to take the other side of that. I'm not sure whether or not I will, but that's a big move for a company, a financial company that I think is going to do fine in 26.
The other names, as we showed, too, it's not limited to a Blackstone, which is maybe the first one you think about, but the builders, too, Steph, that we were just speaking about.
Yeah, but the builders have been weak all day, and they've been weak for a while now, so I'm not really sure how much exposure they have on the institutional side, to be honest with you. I think it's a small portion for Toll Brothers, for sure. But
there's Josh's Invitation Homes, by the way. Throw it up again, guys, if you could, please, just to so we don't cycle past it so fast. I mean, that's one of the biggest losers on this news, too.
I mean, well, I think there's a lot of reform coming, to be honest. I don't think it's just going to be just this. And I think that Eamon was alluding to that we're going to get more information because Trump did talk about that he wanted to help the housing market. He knows that that's a big piece that's missing in the economy, right? We've been able to grow 3% in GDP without housing and without auto. And he knows that. And he knows it's tied to rates. So he's doing his part. And then you get a dovish Fed in and they'll do their part.
All right, we will do finals next. Finals.
Palo Alto Networks.
Materials.
Capital One.
IDEX Labs.
All right, I'll see you on closing bell.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It's Thursday, January 8th, 11:20 a.m. And here's what we're going to cover today. We're going to look at how the markets are performing right now in this live market that you see here. We're going to take a look at the heat map. That's important so we can see what individual stocks are looking bullish. We're going to look at the groups. That's going to be the sectors. And beyond that, we're also going to take a quick look at a number of ETFs like the SPY, the Qs, the Dow, the Russell 2000, the Eurostoxx FEZ. We're going to look at about 32 stocks and ETFs that were discussed on yesterday's halftime report and closing bell. Okay, Tom Lee was on closing bell yesterday, and we'll look at his ETF, GRNY. We'll look at gold, Bitcoin. We're going to look at some of these Mag 7 stocks, and we're also going to take a look at these 3 stocks requested by our members. And remember, if you become a member, you can also request a stock to be analyzed. In addition to that, there's different levels to the memberships. If you come to my channel, Blue Cloud Trading here, you click on what you want to do is click on the join button. There it is. And these 3 different level memberships will pop up. You've got Blue Cloud Supporter. Under this level, you can request 1 stock or ETF be analyzed each month, and you'd be helping to support the channel. Blue Cloud Trader is the next level up, and under this level, it's $24.99 per month. It's you can request 2 stocks or ETFs be analyzed, okay, as well as getting access to the exclusive member-only strategy videos that I do. Blue Cloud Legend level membership. Under this one, you can see some of the other perks here, including you'll get access to day trading videos. You'll get access to those member-only strategy videos. You can request 3 stocks or ETFs be analyzed each month, and There's also the most important and critical thing is the daily stock and ETF trades update. And what is that? It's basically me submitting my entire portfolio um, and sharing the trades that I place each day. Okay, so that's really important. You're going to get access to that. Once you become a member, there'll be a new tab that pops up next to posts here. And it will look like this. It will say membership. And you just click there and you'll have access to it. This is what if you scroll down here, this is what the member only videos look like right there. They're usually around anywhere between like 50 minutes to like an hour or longer. And like I said, I also share like new stock ideas every week, for those of you who want to get some better understanding of the markets and ideas for trading, consider becoming a member. Okay. And don't forget to hit the subscribe button, folks. It's free to subscribe. Doesn't cost a penny. And then hit the alert notification bell to make sure that you get my updates. All right. Let's get back here and let's take a look. Actually, what we want to do is look at how the market is performing right now. Let's get back to that first. Here we are. The Dow up 0.49% today. NASDAQ is down 0.67%. What's happened here is it kind of gapped down slightly, came down around 10 a.m. It's starting to recover a little bit, building almost like a little bit of a triangle there. S&P 500 is down just 0.05. And the Russell 2000 is actually up the most, 0.76%. So it gapped down in the morning, but then it started to like move up, which is interesting. Let's take a look at the heat map. And that's going to give us a better perspective of the strongest stocks today. And you can see the ones that are here are mostly in the green, fall in these categories like health. Well, healthcare is kind of mixed. Communication services is also mixed, but the consumer cyclicals look good. Consumer defensives are actually looking good today. Utilities are looking really green. Basic materials also, for the most part, and energy stocks are recovering after yesterday. The financial stocks look good. But look, the technology stocks are not doing particularly great today, right? Except for IBM, which is up 1.75%. Uber's up, Adobe's up, ADP is up. Let's take a look at the groups. So yeah, basically you see that consumer defensives are up the most, up 1.71%. Technology is down the most, down 1.79%. If you look at the 1 week performance, technology is down 0.21. Utilities are down 0.44. Basic materials, industrials, healthcare are the top performers so far. And for the 1 month performance, basic materials is up 10.32%. Technology down 2.92% for the month. Interesting. So let's get back to the charts here. What we're going to do now is actually, I'm going to give you a quick little brief synopsis of this indicator that I'm using. It's called Ichimoku. Let's get rid of these lines for a moment here. And what we're looking at, folks, is this superimposed indicator. It's called the Ichimoku indicator, and it's comprised of 5 lines. Okay, we've got basically this Ichimoku cloud here that's comprised by the Senkou span A and the Senkou span B. The Senkou span A is derived by taking the midpoint of the 9 period. So this is the midpoint of the last 9 periods. Okay. And then the midpoint of the last 26 periods is the red line. So this is called Tenkan-sen and Kijun-sen. This is called the Senkou span A. This is the Senkou span B. This is called Chikou span. So the Senkou span A is derived by taking the midpoint of these 2 moving averages, projecting it 26 periods into the future. Then you've got the Senkou span B, which takes the midpoint of the last 52 periods. So think of it almost like a moving average, like the 50-day almost. But instead of projecting it under price, it actually projects it into the future. Very unique part of this indicator. And then you also have the Chikou span, which is actually the current price right now, projected 26 periods into the past. And if that white line there, if that line is above the price, that's very bullish. If it's under, like it was there, it's very bearish. And so we don't have a very bullish chart. Right now, the S&P 500 is still very strong. It has been consolidating on the weekly chart. This is what you're looking at, a weekly chart right now. Okay, so each one of these little bars here represents 1 week. But it has been consolidating, meaning the following. Let me just show you what I mean. So it's been staying under that 61, 66 level and basically stuck inside this little box, right? And until we break through that level, And I'm more, positive about it happening versus not happening because the directional movement index is also giving us a little bit of a hint here that it's more likely soon to break through that level. That you've got the positive DI9, which is that little green line right there moving up. That's positive. We want that green line above the red line, which is the negative DI9. And the ADX, where it was declining, it's starting to flatten out a little bit. And if that starts moving up, that's also going to be a really bullish sign, just like it was over here, for example. And it led to that nice move, as you can see there. When the red line is above the green line, okay, the negative DI9 is above, that's very bearish, like back in April. And you can see how it led to that decline right there. So, yeah, the indicators are giving us mostly bullish information here on the weekly chart. And what about the daily? Same situation, right? Price is still holding up above the moving averages, which is what you want. All right. QQQ ETF is down 0.79%. It's basically flirting here with the Tengen-sen, the 9-period. Overall, it's pretty bullish. You got a future bullish cloud here with a single span. By the way, the other thing that you want to look for is single span A to be above the single span B. And if you see a blue flag here, what that represents is the fact that this ETF or stock that I discussed is passing the Ichimoku test on both the weekly and the daily time frame. So we're getting a longer term time frame chart as well as the daily. So it's going to give us a more optimal picture of the direction of whatever stock or ETF we're looking at here. So the Qs look good here on the daily overall, even though it's down 0.82. And it does look like it might potentially close under the Tengen-sen by the end of the day because we're seeing this little, a little bit of bearishness here. But it's still the middle of the day. It's only 11:34 a.m. Okay, you can see the time, little clock here is still ticking. So let's look at the 5-minute real quick. This is what the 5-minute chart looks like. So it's possible, for example, that price might come down here during the day and then start to bounce. We'll see if I'm right about that. There's the January 8th, as you can see. Okay, we'll see if it creates a double bottom on the 5-minute chart. What about the Dow Jones DIA ETF? Looking very strong, up 0.56%. Yesterday it gapped up and started dropping. It did create a bearish pattern right there, dark cloud cover pattern that I've talked about in the past, and then it gapped down some more, but now it's showing some strength. It found support at the 9-period right there. Very bullish so far for the Dow. And the Russell 2000 also looking actually quite bullish here. As Tom Lee mentioned, you get well, he didn't mention this, but I'm mentioning it. He did mention that the Russell 2000, the small caps are looking strong, and they are, because on the daily chart, what we're seeing is a crossover happening right there. You can see the 9-period is crossing above the 26, right? And so that's very bullish because it had crossed under here, and that's usually a bearish signal. But the fact that it's recovering, that's very bullish. Now, here's the other thing, though, folks. If you look a little closer, you'll notice, let's take a look at the resistance level that it's probably going to reach. The high there of that candle is 258.20. All right, that's a daily level of resistance. Let me get rid of this line. This is no longer relevant at this point. And it was based on that candle. It's an older trend line. So that's what it needs to take out, 258.20. We're at 257.46 right now. And then that's going to give us more optimism about the Russell continuing its move up. FEZ, Euro stocks, pulling back a little bit these last couple of days. It reached that $66 level and dropped, but it's still overall a very bullish chart. You can see the very strong trend, price above the moving averages on the daily as well as the weekly chart. And look at that ADX. This is what I'm talking about with the ADX represents momentum. And when that's increasing and the green line is above, that's very bullish. All right. So you can see, and there's going to be some crisscrossing that takes place. You're going to have these little pullbacks sometimes. But right now, we're in a very positive place. VIX is also dropping today, down 0.46%. Found resistance at the Kijun-sen, the 26-period right there. And we do want the VIX to be dropping. That's important. It represents the volatility coming out of the market. All right, let's take a look at the next segment here. These stocks are the ones that were talked about on the show yesterday. So let's look at those. What we've got here is, I've basically already analyzed all these. So there's about 32 of them. We're not going to spend too much time on each one. That's the beauty of this indicator. Ichimoku stands for at a glance. And at a glance, we can quickly assess if it's a strong trend, something we should even consider, or maybe skip altogether, wait for it to show some strength on both time frames first before getting in. And so I've identified the strongest ones at the top here with the blue flag, and the ones on the bottom do not have a blue flag, as you can see here. And we're going to run through those. So let's get into those real quick here. We got Capital One Financial on the weekly chart, very bullish, right? You can see that very easy to identify that. Looks good. It's up 0.75% today. Gold is looking good too, up 0.25%. Again, I've already reviewed these on the weekly chart, so I can tell you that they meet the qualifications that I'm looking for before I pull the trigger on any specific stock or ETF. GLD looks good. GRNY has pulled back a little bit. This is Tom Lee's Fundstrat Granny Shots US Large Cap ETF. It's pulled back a little, down 0.55%, but overall we got a future bullish cloud, on the daily. It's still holding up above the moving averages. On the weekly chart, it looks like the Tenkan-sen and Kijun-sen are converging, which is not a good sign right there. So let's hope that basically is a very short-lived little convergence that you see right there, because they're at the same level right now. In fact, it looks to me, if you look to the left here, there's a little box that pops up and it gives us the exact numbers. The Tenkan-sen, the green line, is also called the conversion line. It says 2446. And the Kijun-sen is also the baseline, and it says 2448, which means that the Tenkan-sen is currently crossing under on the weekly. But because it's Thursday, we don't know exactly where that's going to be until tomorrow around 3:30, 4 p.m. You'll have a better sense of exactly where we're at. Interactive Brokers looks good. I like this one on the weekly and on the daily chart. It's pulling back a little, down 2.14%. It reached that level of resistance, 73.35. The reason why I add these levels is because typically when price comes up to a specific level and then you see a drop, that's a significant point right there. Okay, that's a very significant candle. It creates a new level of resistance. And you can see here where price moved back up to that exact same level. What happened? It dropped, came back, tried to. It didn't quite make it to that 73.35 on that one, but it did drop again, didn't it? So, and here we are once again with Interactive Brokers doing the exact same thing, coming close to the 73.35 level and then dropping. So there's a lot of resistance, obviously there. So would I be adding a position here? No. Just based on that, I don't like the fact that it's been staying stuck in this long extended, basically consolidation. What about JP Morgan? JPM is looking good. This one here yesterday dropped under the Tenkan-sen briefly for a day, and then now today it's up 1.09%. The market never goes up in a straight line. I think we all know that by now. So whenever we start seeing strength, that's a good signal. Here it is on the daily, here it is on the weekly chart. On the weekly chart, we've been above both moving averages in the clouds since November 28th. So, nothing new here for JPM. KBE, the S&P Bank ETF looking strong, up 2.15%. I think what I also like about this one is the fact that, on the daily chart today, it actually broke through this high here, the high of 63.28. I think that's the highest level. Yeah, 63.28. So very good signal right there. KBE, the banks. KRE is another ETF they talked about on the halftime report. Regional banking looking good too, up 2.44%. Okay, there's a daily, there's a weekly. Going to come close to 70.25. It will reach some resistance at that level. It's approximately another 2.3% away from that level. MS, which is Morgan Stanley, that's the ticker symbol there on the weekly chart. Very strong chart, very bullish on the daily chart also. Up 0.51% today. You see a little pullback, but it's finding support right at the 9 period. You got NDAQ looking good. but it's down 0.19% today. But overall, it's a healthy chart on the daily and on the weekly. In fact, I like this one a lot more because it's broken through that level of resistance, the 97.63. And if you look at the weekly chart here, it's built what's called a bullish engulfing pattern right there between those two candles. It's when the larger candle engulfs the prior small red candle. So that's very bullish. Okay, NDAQ I like. What about NTRA? On the weekly, it looks okay, right? We've got price above the moving averages. We have a future bullish cloud on the daily chart here. It's pulled back a little bit today, down 6.16%. So it retracted under the moving averages. So you just hold off on that. I wouldn't be adding a position here based on that, but it's still overall a very strong chart. ROK is another one that I like. Rockwell Automation. Here's the daily chart, pulled back, finding some support. It's down 1.52. And by the way, folks, if you see a red candle, it's not typically a good idea to be adding positions when it's forming a red candle, okay? So just keep that in mind. Here's a weekly chart. We got a spinning top here too. But it's overall, we've got a bullishness for this particular stock. RSP, which is the S&P 500 equal weight ETF. Let's take a look at the weekly chart. It looks very bullish to me. I like this one. Okay, let's take a look at silver real quick here. SLV is the ticker symbol. And what you'll notice is price was gapped and had gapped down this morning. And now it's recovering. There's a lot of buying happening. So let's look at that on a 5-minute very quickly, see what it's what it looks like. Yeah, there's the gap down. And this was the opening price, that dotted green line that you see right there. And it's been moving up. Now it's moved up approximately 2.68% since the open up. But remember, it did gap down from yesterday, so that's why it's down 2.59%. But it's showing some strength right now, which is good. On the daily chart, it broke back above the Tenkan-sen, the 9 period. And remember the weekly chart on silver, we've got this reversal type candle here. So tomorrow we'll have a better understanding of what that's going to look like. We do have to wait until Friday, but it's not a bullish candle, obviously, right? On the daily chart, it does look like it's recovering after this pullback. SMH is above the Tenkan-sen, above the Kijun-sen, down 1.98%. I do like SMH still, even though it's pulled back a little. XLB, a bullish engulfing pattern. I like the basic materials. This is the Spider Select Sector Materials ETF, up 1.54% today. Here's a weekly chart, very bullish. It actually broke through this high today. I'm sorry, this week. All right, so it's more than likely to stay above that level, I believe. What about XLF? XLF looks good on the weekly chart, still holding up above the 54.49 level, and on the daily chart, very bullish as well. Okay, let's keep going. Let's find some of these other ones here, like XLI, which is up 0.75% on the daily chart. Still a very bullish chart on the daily and on the weekly chart as well. I like it. XLV, the healthcare ETF, stalling at that 159.64 level. It's under that level at 159.28 right now as we see price moving, and it's that's based on a high of this weekly candle from September 6th of 2024. So you can see when we reached that level, we pulled back, we came back up, found resistance there, pulled back. Now we're finding resistance again. Will we break through that level? If we do, that's going to be very, very bullish for the healthcare ETF XLV. XRT on the weekly chart looks good. I like this one. That's the retail ETF. Here's the daily chart. Very bullish for XRT. Now the rest of these do not have a blue flag, so there's something technically off or wrong about them. I'll just kind of give you a quick synopsis of what's happening here. APH is under the Tenkan-sen, so I'd hold off on Amphenol Corporation. And what about BX? It's inside the cloud, and you don't want to be buying stocks when price is inside the cloud or under the cloud. You're obviously in a downtrend or going sideways. CL, Colgate, is breaking through the Ichimoku cloud, but if you look at the price action, you'll notice that basically it's still under that little trend line right there. Okay, it needs to break through that level. And that's the daily chart. Let's look at the weekly. On the weekly, we're still under that, under the cloud, under the moving averages, under the 200. I wouldn't touch CL. DHI, Dr. Horton Inc., DR Horton Inc., residential construction. It's not doctor, it's just DR. This one here is inside the cloud. Skip that one. No thanks. Disney. Tenkinson is under Kijinsen. Chiku Span is under price. No on Disney on the weekly. And here's the daily chart, which does look more bullish. ETN, Eaton Corporation, is under the cloud on the daily. I'd skip that one altogether. IBIT is still under the cloud. You can see what happened here. We showed a little bit of strength, came up to the cloud, found resistance at the cloud and pulled back. Now it's finding support at the Kijinsen. So maybe we'll see something happen here soon, but it is up 0.25% right now as we speak. INVH, Invitation Homes, is still under that cloud in a very, very embedded decline. Okay, that's a downward channel that we're looking at right there. You can see it very clearly. And so it's impossible to determine when that's going to change the direction without using technical analysis. All right, you're looking for a change in the direction, and how will we know? We'll see price breaking above the cloud itself. We'll see it breaking above prior highs, and then we'll have a more optimal entry point, right? When there's more demand, which is essentially what makes prices of stocks go up. It's the demand, right? Interest in the stock, more buyers than sellers, that will push the price back up. PANW, Palo Alto Networks, it's under the cloud. I'd skip that one. TOL, that's Toll Brothers, breaking above the cloud. You can see here it's above the moving averages too, but the Tenkan is under Kijinsen. Chiku Span is under price still on the daily, and on the weekly chart, it does look pretty bullish overall. I like it on the weekly. It's building a little symmetrical triangle pattern right here. You can see that. So if it breaks above that little triangle there, I think it's more likely to continue to the upside. Okay, what about TT, which is Train Technologies, inside the cloud? So skip that one. XHB, under the Kijinsen. And Tenkan-sen, yeah, so Tenkan-sen is under the Kijinsen. Price is under the Kijinsen or weekly. I'm sorry, on the weekly chart. On the daily chart, it's breaking above the cloud. And but the Chiku Span is still underpriced. So no on XHB. ZTS, Zoetis Inc., healthcare sector, drug manufacturer, in a very embedded decline here in a downward channel that I wouldn't touch. Also another one, right? You can see that. It's very clear. I mean, from the highs here, just measuring from these highs, it's dropped 36.37%. Now, we did develop a double bottom type pattern here with CTS. But we're stalling at that high right there. So if it can get back above the cloud, at least it will look slightly more bullish on the daily chart. But again, you know, on the weekly chart, if you look at the weekly, that's really a damaged stock that I wouldn't be jumping into anytime soon. What else do we have here? We've got Tesla, some of the Mag 7s, not all of them. The others are in the portfolio, in the Blue Cloud portfolio. You should consider becoming a member. It's under the Tenkan-sen right now. Okay, it's under the Tenkan-sen currently. So I'd hold off on Tesla on the weekly. On the daily chart, it's under the moving averages. No on Tesla. Apple is under the cloud for the first time since, wow, we'd have to go back to June of 2025. So it's showing a lot of bearishness here. If I get rid of these lines for a moment, you can see it very clearly, guys. It's not that complicated. We broke through this low, and we're still continuing to drop to the downside. So I'd stay out of that. In fact, if you look at it really closely, it looks like a head and shoulders pattern that's been broken. I'll just go ahead and throw the head right there. There's the shoulder. There's the other shoulder. Okay. And then there's the neckline area that's been broken. So Apple, not something I'd be interested in currently. The technicals are off. And so the next earnings are coming out January 29th at the end of this month. That might do something to the stock, maybe. But right now, I'd stay out of it. Meta is inside the cloud and under the 200-day. So no on Meta. Microsoft is under the cloud. No on Microsoft. It's been just kind of consolidating in this little box. That's all that's happening with Microsoft currently. Amazon showing more strength, showing some interest. The buyers have stepped in a little bit here. You can see that the directional movement index has become bullish here. ADX is moving up. Positive DI is above negative DI on the daily chart, but it does not get a blue flag here because the cloud itself is still bearish with single span A under single span B. And what about the weekly chart? On the weekly, looks good. So Amazon is almost there, folks. We are, I can see the bullishness here, the directional movement index. I like what I'm seeing with Amazon. I think it's going to probably break out soon. So watch out for that one. And I'll be sharing that with you guys in an upcoming video, of course. SKYT, Skywater Technology Inc. is one of the stocks from our members request list. Okay, so we got SKYT, which is actually down 1.43% today. This is a weekly chart, very bullish on the weekly. I do like this. Let's see. I got some lines here, like this particular 24-23 level. If you look at the high, it's been taken out this week. And here's a daily chart. It gives us more info, right? So it has moved up quite a bit. That, by the way, this is a very volatile stock. Even though the beta is just 1.38, all right, this is a very volatile stock. From this, just 1, 2, 3, 4, 5 days ago, from this low here where it got above the Tengensen and Kijinsen, it's moved up 45.78%. So very volatile stock, very profitable if you happen to have a position in Skywater Technology. But would I be adding a position here now? No. In fact, I'd probably be taking some profits, maybe a portion of profits because of the reversal candles that I'm seeing here forming, down 1.32%. If you look at a 30-minute time frame on SKYT, you can see it stalling here, creating a little bit of a box. Now, it could, of course, tomorrow or later today break through this box and continue its to the upside. But right now, it is consolidating. So I'd be holding here and waiting to see what happens. I'd probably be using like a 30-minute time frame based on what I'm seeing here. Okay. And what about EW, Edwards Life Sciences? On the daily chart, it is in a consolidation box right now. It entered the box back here on October 28th, and it's just been moving sideways. Overall, it's not a bad looking chart. I mean, it's technically above the cloud. Tengensen is above the Kijinsen. Price is still under the green line there, and Chico's is just barely under the candle here. It could easily break back above, but it's not a buy signal here. On the weekly chart, you can see more clearly that we are, for multiple weeks now, just going sideways. So I'd hold off on EW. FIGR, Figure Technology Solutions Inc., is a relatively new stock because it was introduced here became public on September 11th, 2025. Figure Technology, it's in the financial services sector, capital markets. And since the opening price, which is around, I think it was like 35, what was that open? $36. The opening price was like $36. It's moved up 57.49%. But it was going sideways for a little while. You can see with a lot of zigzagging here going on. And it broke through this prior high. That happened 1, 2, 3, 4 days ago on this candle back on Monday, January 5th. And it's still moving up. From breakout level, it's moved up 15.45%. It's getting a little extended, far away from the moving averages. It's more likely to pull back at some point soon to retest maybe the 49.50 level and then maybe continue its move up to the upside. But you never know until the price actually unfolds. Right now, you can see that it is stalling around these highs here, these levels. So just be very careful here with FIGR. And that's going to do it for this video, guys. Thanks for watching. Thanks for supporting the channel. Hit that like button. It doesn't cost anything. Hit the subscribe button and share this video. If you know someone that's into trading or wants to learn about trading, this is a pretty, we're going for educating, I think, people that are just kind of like starting out, trying to learn a little bit more about technical analysis and the advantages, right? You should certainly pay attention to the profit margins of stocks, the fundamentals, right? And you should look at all the fundamental information that you can find with stocks. But, like, for example, profit margins. You can look at the sales growth rate. You can look at the price to sales ratios and PEG, price to earnings growth, and operating cash flows and all that stuff. But if you use the technical analysis in addition to all that criteria as well, you'll have a much better, I think, success with your trading. So anyway, that's going to do it. Thanks for watching. I will catch you all in the next video.